This is Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. Welcome to the weekly Top 3, the top 3 things on our mind here at Alaskans for Sustainable Budgets for the week of April 6th, 2026. The weekly Top 3 is a regular segment on The Michael Dukes Show. The show broadcasts on both Facebook Live and YouTube Live, as well as via streaming audio from the show's website, weekdays from 6 to 8 a.m. I join Michael weekly in the first hour of Tuesday's show from 6:10 to 7 a.m. for a discussion between the two of us about our 3 issues. We post the podcasts of our discussion following the show on the Alaskans for Sustainable Budgets Facebook, YouTube, SoundCloud, Spotify, and Substack pages, also on the Alaskans for Sustainable Budgets website, as well as the project's page on national blog site, medium.com. You can find past episodes of the weekly Top 3 also at the same locations. Keep in mind that in addition to these podcasts, during the week, you can also follow and participate in the discussion with us of these and other issues affecting Alaska's fiscal and economic condition by following us on the Alaskans for Sustainable Budgets Facebook page and through our posts on Twitter. This week, our top 3 issues are these. First, we discuss the absolute hypocrisy being exhibited on all sides during the recent debates on the PFD issue in the House Finance Committee. Second, we discuss the issues we see with SJR 29, the proposed constitutional amendment to establish a constitutionally dedicated education fund. And third, we examine an extremely interesting and we think important presentation made last week in the House Resources Committee by Gaffney Cline, the legislature's consultant on the AKLNG project. And now, let's join Michael.
Brad, let's get into it. I think we got a lot of good stuff to discuss this morning. Things that we've been kind of chatting about over the last few days here on the program. Let's start off with number 1, our favorite topic, the PFD. This morning, PFD hypocrisy. Give me the rundown here.
Well, Michael, the events of last week, which I know you've talked to a lot about on the show, the debate at the early part of last week on Neil Foster's amendment to pay a full PFD out of the permanent fund earnings and sort of let the chips fall where they may on the general fund budget, and the defeat of that, and then the votes on the defeat of that, and then later in the week, the vote to include a full PFD in the budget, but statutory PFD in the budget, but contingent on drawing from CBR. There was just hypocrisy all over the place during those debates. The one that really, I mean, at some point, all of the members of House Finance irritated me as we went through this debate. But the ones that really got me going, I think early on, were Elise Galvin and Nellie Jimmy, who both said, yes, the PFD or using PFD cuts to fund government is horribly regressive and takes money from middle and lower income Alaska families and is a bad thing to do. But there are solutions to that. If only other people would agree to it, including, in both of them said, the high earner income tax and oil taxes. If only people would agree to that, we could solve this. But because they're not, and because we have to keep spending for government, we're going to vote against this. We're going to vote against Neil's amendment. And ultimately, they also voted against the amendment offered by Jeremy Bynum to pay the full PFD contingent on the CBR draw. The hypocrisy in that is there's 2 things that just irritate the heck out of me. One is Elise Galvin's high earner income tax doesn't offset the PFD. What that income tax does is create a fairly thin veneer of revenue. The projection is, or the fiscal note is, about $300 million in revenue against a 1.5 billion, 1.6 billion, depending upon what oil prices are on the day, deficit. Creates this thin veneer of $300 million of revenue that would, theoretically offset $300 million of PFD cuts. But once you get past that veneer, you still got this $1.2 billion, $1.4 billion deficit that you have to fill somehow. And they, by failing to propose anything else, they propose to fill it through PFD cuts. So when you do the math on that, that's thin veneer of $300 million, and then the remainder coming from PFD cuts. Sales taxes. The governor's proposed sales tax. The governor's proposed $700 million that he would have raised through his broad-based sales tax is better. Yes, it is. Yes, sales taxes are slightly regressive. The governor's proposal was slightly regressive, but they're a heck of a lot less. It's a heck of a lot less regressive than the combination of this thin veneer of income tax followed by this still heavy dose of PFD cuts. Sales taxes are less regressive than that. So for them to go around saying, "Oh no, we don't have any proposals out there. We don't have anything we move forward on. We would love to have a high earner income tax," is hugely hypocritical, because they've been offered something. They were offered something by the administration that is better for low income Alaska families, low and middle income Alaska families, than continuing to use PFD cuts. And the oil tax, I mean, that irritates me also. The majority, if you look at the statement by the majority at the time it was formed, the House majority, they oppose oil taxes as a majority. The reason they do that is to get Chuck Kopp. They got to get Chuck Kopp on board as part of the majority. They gave him they gave him the majority leader position, and they also gave him no oil taxes. That's what they paid in order to get Chuck Kopp on board. So when they now talk about, when those two and with Neil talks about, oil, we can solve this through oil taxes, they've already agreed. They've already given it away for this session.
Right.
So they've got no. I mean, the alternatives they talk about don't solve the problem in the case of the high income earner or the high income earner tax, the high earner income tax. Don't solve the problem, or they've already given it away in order to get Kopp on board. Dunleavy gave them an answer. Dunleavy gave them the sales tax proposal, but oh no, they couldn't do that because it came from Dunleavy. And so the hypocrisy of saying, yes, PFD cuts are bad, but we don't have any better alternatives. The hypocrisy of that is just huge, because they do have a better alternative. They have a better alternative that was offered by the administration.
Well, and you knew this was coming, right? Because they again, this is all more kabuki theater. They wanted to be able to say the right things about what they need, and they want to be able to, we can share. Although Nellie Jimmy, I don't understand her vote in the communities, because her communities definitely would like to see a full PFD, and they're the ones that are paying through the nose on the PFD cut. So I don't know exactly what her position. I can understand Elise Galvin's, where she can then point back to her bill as pitiful as it is and say, well, I offered this, yada yada. But Nellie, I don't understand. I just don't understand it. And of course now it's going to go up, and they've given Neil Foster more ammunition for him to be able to say, well, I voted for the full PFD, and now it's all going to go down in flames, but at least I voted for it, kind of thing, right?
Yeah, and Neil at least is. I mean, Neil was right on all the arguments he made. The argument where he goes hypocritical is to say, yes, we're going to create this deficit if we pay the full PFD, create this deficit in the general fund. He was right about that. That's where the deficit is. It's in the general fund. The PFD is paid for from permanent fund earnings. That's what the statute says, already paid for. The deficit's over in the general fund. He was right to say that we're going to create this deficit over in the general fund. But his argument about how they were going to deal with that through oil taxes. I mean, Neil specifically mentioned oil taxes. Once again, they already agreed. The majority already agreed that oil taxes are off the table. So he's talking about something that he knows is unrealistic. He was another one of those that piled on the governor's proposed sales tax. Not as much as Jimmy did, and not as much as some others did, but he was one of those that piled on the governor's proposed sales tax. When the smoke clears and you look at the proposals that have been put on the table, the sales tax is by far the most realistic, because you had a Republican governor proposing it. and the most equitable in terms of its least regressive compared to Galvin's thin veneer of a high earner income tax. But the hypocrisy wasn't limited just to the Democrat side. I mean, Stapp and Bynum hugely irritated me, both at the beginning when they said, "Oh no, we can't vote for a full PFD because that would mean we would have to draw money from the ERA. We'd have to draw money from savings in order to pay for the PFD." No, that's not correct. Neil was correct on that point. The PFD is already paid for. That's what the statute says. You don't have to draw money for the PFD. That's not what you're doing. You have to draw money. If you're going to do it, you have to draw money for the general fund. So they were hypocritical when they made that argument at the beginning, and now they were hypocritical at the end when they voted for the amendment that made a portion of the PFD contingent on a savings draw, because basically all they're doing is they're trading taxation through reducing the CBR. They're trading taxation of future generations by taking away savings that future generations will need to get themselves through their own fiscal crises. They're taxing future generations in order to pay current costs. And so, if they think it's hypocritical to draw savings to pay for the PFD, it's hypocritical to tax future generations through the CBR draw to pay the PFD. What was lacking from the conversation across the board, and there was no representative who voiced this, but what was lacking was a recognition that, hey, we have a solution to this. The governor proposed it at the beginning of the session. Let's go back and look at that, because that's a fairer. I mean, it's still slightly regressive, but it's a fairer way of resolving the deficit that we have, and it recognizes that the deficit's in the general fund, and that we are addressing that through a revenue measure that will close the gap in the general fund in a fairer way, a less regressive way than PFD cuts. No, I mean, that is the solution. But of all the solutions that have been put on the table, that's the solution that works best. And none of the supposed experts on the House Finance Committee raised that at all during this entire debate.
But Brad, that's assuming that they want to actually solve the problem.
Yeah, well,
right? I mean, I'm not trying to be. That's assuming that they would actually like to solve the problem. We know what the problem is. The problem is solvable. The people there just don't want to change the way that they do things. If they actually wanted to solve the problem, you're right. There's a simple solution, but and again, the first thing that needs to happen out of all of those things is a spending cap, so that we can hold back the size of spending, and then any excess would have to go back to the PFD. But until we get that, I mean, nobody's serious about actually fixing the problem at this point.
I think that's right. And I think my point is, people want to pile on, and you read the Alaska story, Suzanne's piece, they want to pile on the Democrats. Everybody wants to pile on the Democrats for this. And some want to pile on the Republicans for this, but none of the members of the House Finance Committee is being honest about what's really going on. They're all playing, I mean, you're right, they're all playing this kabuki theater. None of them are really trying to solve the problem. Neil, I got to give Neil credit. Neil at least outlined what the problem is, which is that, look, the PFD is fully paid for out of the earnings reserve. That's what the law provides. That's what the POMB draw is for. A portion of it under the statutes designated for the PFD. We've got that problem solved. Where the problem is, Neil was correct in this. Where the problem is over in the general fund, and we need to find a solution to the general fund. He was correct all the way up to that point. Then he started talking about oil taxes, but he was correct all the way up to that point. And so he had the problem correctly defined. It was, as you say, nobody wants to solve the problem. Nobody is on House Finance is serious about solving the problem that confronts the state. And it's just, it's hugely disappointing. These are the people that we look to be serious about solving the problem that confronts the state.
Which is why I've come to the conclusion that the problem's never going to be solved. The bottom has to fall out before anybody actually gets uncomfortable enough to actually do anything. I fully am committed to that belief now. I've been toying with it for months, but I've come to the conclusion that the whole thing's got to crash and burn before anybody's going to take an effort to actually fix it. That's the bottom line, Brad. They just, it's all pretend. It's all pretend. It's all fake and gay. It's all just, we're going to say the right things and do the right things. We're going to attempt to show our voters that we tried, even though we set ourselves up to fail, but we tried to get this stuff passed. And now we could say the whole thing. And now we could just keep doing what we've been doing. And we'll just have to shrug our shoulders and say, well, what you going to do? We tried. And now here's where we're at. I mean, that's really, in the long run, that I'm 100% right on that. I would stake money. I'm 100% right on that.
Yeah, but I can be disappointed with that, right? I mean, I can.
No, you can't be. You must agree with them and say, and just feel for them and say, oh, it's so bad that they can't get this done. It's just too bad.
No, but I mean, I can be disappointed that that's the direction the state's heading. The direction that you outlined, where we have to crash and burn. I mean, there are members on House Finance, one in particular, that I had high hopes for, that would stand up and who has said that they would talk speak truth, who would stand up and be a leader on these issues, and articulate, not only the problem, but be supportive of the solution. But that member was critical on the Republican side. That member was critical of the governor's proposed sales tax as well.
Right.
It's just
you're talking about Will Stapp, right? I mean, this is it.
No, actually, I'm talking about Alexi Moore.
Oh, you're talking? Oh, Alexi Moore. I apologize. You're right. Okay. All right.
I mean, Will Stapp has his own. I mean, Will Stapp just wants to ignore the law. I mean, we've got a Republican who, who's a law and order, got to follow the law, got to enforce these statutes, got to do what, we pass these laws and they have meaning, except when it comes to a statute that's still on the books. It's never been, as Neil pointed out during the debate, that's never been changed because they can't get the votes to change it. But yet they just ignore it and they sort of go off on their own merry way. And then Will Stapp, who says, oh, we can't tax current Alaskans to pay for, in his view, to pay for the PFD, because his view is the PFD isn't already paid for, notwithstanding the statute. We can't tax current Alaskans to pay for the PFD, but then votes to tax future Alaskans to pay the PFD. Now, Will Stapp has long since left the station in terms of being, dishonest and hypocritical on this issue. But Alexi was someone who, ran that she was going to tell the truth and she was going to, be straightforward on this stuff. And, she was going to come up with solutions, and took heat last session. Her first session took heat for voting for Rob Yunt's digital tax proposal. Took heat for that, supporting it, and said, no, this is the right thing to do. We need to look at it. And so we get to the point where, all right, we've got a solution in front of us. We got the sales tax in front of us. It's a not the world's perfect solution, because it's still slightly regressive, but it's a better solution than anything else that's on the table. And so when we get into a debate where that issue, the issue of alternative revenues, becomes important, disappears from the discussion. So yeah, it's not, there's just not anybody on House Finance. I mean, maybe there's not anybody in the legislature, but there's not anybody on House Finance who's really seriously trying to solve issues here.
Brian says the solution is simple. The political will is not. Right. Rick says, say the things, keep their paychecks coming in, go home, do it all over again next year. Pretty much. Chris says, all I hear from Juneau is the Charlie Brown grown-up saying, "Burp, burp, 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 burp." That's pretty much it, man. I mean, Brad, I'm not trying to be Debbie Downer here, but I'm trying to be realistic and say, hey, only if the wheels come off will we actually change. And I think that's part of the problem. We are continuing now with Brad Keithley from Alaskans for Sustainable Budgets. The weekly top three, the three big issues that Brad sees on any given week. And we're moving on to number two. Number two is a constitutionally dedicated education fund. Oh, that's a great idea. Let's put it out of sight, out of mind. Let's just dedicate those monies and we never have to debate it again, right? I mean, we could have done that with a PFD, but let's just do it again. Let's just put it away. Brad, what do you say?
This is a proposal that passed the Senate last week. We've not discussed it on the show before. I've not seen a lot of discussion about it in the op-ed pages or in the chat rooms or any place. It's sort of come out of the blue, proposed by Senate Finance, only heard in Senate Finance, and sort of, just sort of there all of a sudden as an issue headed over to the House. It requires 2/3 from each body in order to be confirmed as a constitutional amendment or be proposed as a constitutional amendment in the next general election. It got the 2/3 in the Senate. It passed 17-3. Rob, Shelley, and Rob and Kathy, and Rauscher, I guess, were the three voting against it. But it passed 17-3. It's on its way over to the House. The rationale, as I've come to understand it, the rationale is to make taxes easier. The rationale is you can sell people on education taxes, a tax for education, easier than you can sell people on a general tax, a tax for general government. And so, there's been proposals. Elise Galvin's proposal was originally headlined as an education tax. There have been proposals that have said they're an education tax, but and so they've tried to sell those proposals as an education tax, a way of raising money for education. But you can't do that constitutionally. You can only designate the funds. You can't dedicate the funds. And so subsequent legislatures could redirect the funds, as they've done with EFD, redirect the funds to other uses. So the theory is that if you have a constitutional provision, this provision doesn't put any money, necessarily put any money. It just says we will create this vessel in the Constitution called an education fund into which money can be poured. And so the theory is that we'll create this constitutional provision, and then we'll behind it, we'll start selling these taxes. We'll start pushing these taxes that are in order to put money into the education fund. Now, here's the thought process I guess I've gone through so far on this. The thought process is, well, we need new revenues. We need alternative revenues to PFD cuts. We need more equitable, more fair ways of raising revenue than PFD cuts. And so, yeah, creating something that would make that easier might be a good thing. But the problem with it is that the funds you would raise through the tax would not be the only funds that would be spent on education. You could still spend general funds on education. So what this provision likely would be used for is to say, oh, we need additional funds for education. We've got this constitutional provision now. Let's pass this tax, and the revenues we raise through this tax will be additional funds on top of what we're already spending from the general fund. Right. Additional funds that we can spend on education. There's no cap. There's no way of saying, well, you've got to offset the funds you raise through the tax against the funds that you're spending on education from the general fund. There's no cap in any of that. And so the sense I'm getting, or the sense I'm gaining as I think about it, is all this would be for is to raise funds on top of the funds that they're already spending through the general fund on education and other things. So it really wouldn't help. It really wouldn't help the PFD. It wouldn't really help restrain spending overall, because they would still have the ability to divert the PFD funds to education and other things. Ultimately, that leads me to believe that this thing is a bad idea. That maybe as part of overall fiscal reform, it would have a place, but as a standalone provision, it really it's setting up a situation in which we tax to spend more, but we still continue to spend all this money from the general fund, and we still continue to spend the PFD from the general fund. You don't have the revenues raised through the tax wouldn't act as an alternative, wouldn't act as an offset to the PFD, and wouldn't enable us to back off on enable the legislature to back off, or require the legislature to back off on PFD cuts. It's interesting that it really, it got 17 votes in the Senate without really trying hard, without breathing hard, or without a lot of debate. Over in the House, I'm sorry.
I was just going to say, apparently the enshrining of the education money in the BSA wasn't enough. Right. We already know we've got an automatic increase. We've got this now. It's in perpetuity. That wasn't enough. Now they need to have even more, so it can't be touched again. I'm sorry. Go ahead.
Well, over in the House, I think the calculus will be different. I think there will be concern about the fact that all this is really setting up is additional incremental taxes on top of, or additional incremental revenues on top of existing revenues. It won't really help solve the overall fiscal problem. It won't really act as an offset to PFD cuts. It won't really act as a way of depressing spending, getting everybody involved in depressing spending, because they have to pay. All income brackets have to pay for it. It'll just be sort of this isolated pot of money that gets added to education spending. And so I think those issues, now that you can see it coming, and now that you can start having discussion, or now that you realize you should be having discussions about it, I think those discussions will be had over in the House. But still, it's going to take 14 in the House to stop this train. It's 2/3 from each legislative body. 27. Well, what is it? 27 would be 2/3. 26, 27. Yeah, so 13. 27. So yeah. It takes 14 on the House side to stop this train. And, you start looking around the House Republicans, you look at Jeremy Bynum, you look at Julie Colomb, you look at other sort of squishy Republicans. And it's a hard count to get to 14 that vote against it. So I think it's something that it may be a hard count to get to 14. So I think it's something that deserves a lot of discussion, a lot of writing. I'm going to write about it this Friday, I think, in the Landmine, to really sort of understand what we're doing here, and that it's not the simple alternative. Oh, we need taxes, so we'll just set this up, set up this fund so it's easier to sell taxes. It's not really that simple approach. It's much more. Once you grind through it, it's much more a way of getting incremental money, additional money for the legislature to spend for education on top of the spending that it's already doing for education out of the general fund.
I guess the question becomes, how much is enough? How much is enough for educational spending, right? We've got problems, I know, in the maintenance and everything else of these schools, but that's not just simply solved by pouring more money into the situation. You've got a substantive mismanagement of funds for everything that's happened here, and just pouring more money into the equation is just going to embolden them to do more of what they've been doing, which is ignoring the maintenance, propping up the programs and the funding and everything else. I mean, it's not going to solve anything in the long run.
Yeah, they would have to go out. I mean, it does set up this situation where they have to go out and explain, they would pass taxes that would fund this fund, and they would have to explain those taxes. They would have to, articulate a reason for the need for the taxes, and I guess survive re-election after they did that, or survive a veto and survive re-election after they did that. But and so they'd have that barrier to have to cross. But you can easily see how we sell these things at the local level. Oh, Johnny needs a new school, or we need to do this program or that program. Pass an increase in the property tax to do that. Pass a bond to do that, funded by an increase in the property tax. And so you can see how they would try to do that. It'd be incremental. This tax is for this program, and this tax is for that program, and this tax is for another program. And you can see how they would try to build that up incrementally. It's not, I mean, initially back a few weeks ago when I first started hearing about this thing, I thought, well, that could be a solution, a part of the solution to the fiscal problem, because it's a way of raising revenues, which we need, alternative revenues to PFD cuts, which we need. But the longer, the more I think about this, the more that that's not really the way in which it would work. That's not really the way in which it would work out. And so it's something to be concerned about.
Well, and it's an easier sell to the public, because if you compartmentalize all these different things, you'll find the constituencies that are behind those. Oh, education. Who can say no to, better educating the kids? And then down the road, oh, it's the trails, and we'll get the trail crowd involved, and they can motivate their base to get certain things. And it's just when you compartmentalize it, instead of putting it in the general fund and then having to have kind of a general melee in the legislature over what the spending does for each thing, if you can compartmentalize it and keep it in its own little lane, then that special interest group can vote for it and get it going. It makes it easier to increase the overall size and scope.
Yeah, it does. It does. And there's no constraints. I mean, there's no constraints in the bill. There's no constraints in there's no offsetting constraints that are created in the general fund that the proposal creates in the general fund to prevent this sort of, we'll just keep spending what we're spending over there. This is all incremental. On top of that, there's no constraints built into this. So, as I say, it could be a part of an overall fiscal solution. I mean, I could sort of see it, fitting in as a piece of that, with a spending cap and other pieces of protection of the PFD, use of funds as offsets to the PFD and that sort of stuff. But it's not being set up that way. So, I mean, the more I've thought about it, and the more I've thought about these issues, the more I'm surprised that you have people like, James Kaufman and Rob Yunt and Mike Cronk voting for this thing. People who claim to be fiscal conservatives, claim to be concerned about the size and scope of government. That you have those type of individuals voting for this thing over in the Senate. So I think it's something we ought to be talking about, so that the House members really sort of have the opportunity to think through this fully before they vote on it.
Rob Myers in the chat room says there's a good reason our founders prohibited dedicated funds. Every fund has a good rationale, but it's the aggregate that slowly strangles you. And that's kind of what I was trying to get at. He articulated it much better than I could. Kim says education needs to crash and burn, and maybe everything else will fall in line. Mark says it's already burning. We just keep throwing cash into the blaze. And he's not wrong. Rob also mentioned earlier, watch for SB 227. Finance stripped it down to just the educational head tax now. So they're going to try and marry this to the new dedicated fund for sure, as well. And then Ken said something about stop teaching that the earth is a magical spinning ball chasing a giant gas ball through the vast. What, are we on a flat planet, Ken? Is that what you're trying to say? Are we flat? I'm asking, are you a flat, or is that what you're saying? We're not a spinning ball chasing a giant gas ball through the vastest of space, because I mean, it's there you go. All right. The cold medicine, you need an ID to purchase. That was funny, says Frank, because we were talking about needing IDs to purchase everything, including the cold medicine. So it's at this point. Kim says, at this point, I'd take a one-time payout. I see a $0 PFD for next year. I think this year we're going to see it for sure because it's an election year. But yeah, it very well could be nothing in that. I mean, Brad, what do you think? I mean, could it be? I mean, could it not just be all consumed next year because it's not an election year? The election's over. We'll be another 2 years away, and we've got short memories. Maybe they take it all next year.
Oh, probably depends on oil prices, doesn't it? I mean, if oil prices stayed at $90 or $80 or $70, there's still. I mean, I don't think they've yet identified ways to entirely consume that in other spending. But if oil prices crash to $50, $60, $50, there's no projection that they're going to do that. I mean, what the Iran war has done is sort of soaked up all of the surplus that was sitting out there in tankers and in storage bins, storage facilities that was depressing the current oil price. The Iran war has soaked all that up. So I don't think we're going to see a crash and burn, an immediate crash and burn, but at some point, these high oil prices are going to have the effect of demand destruction. People are going to stop, they're going to curb their use of oil because the economics don't work at these high prices. And so what that usually sets up over time, if you look at the oil curve, is it usually sets up a period where when oil prices start coming back down, demand doesn't pick back up immediately because it's forced people to go to alternatives, or they've closed plants down, or this, that, or the other thing. And as oil starts coming down, it slides way down. So, that probably the point at which we hit a zero PFD is going to be driven by when the oil curve, goes back into its deep decline again.
Well, I mean, you say that they haven't found a way to spend it all. Kathy Giesel had it all lined out, man. She told you, just think of what they could use that $685 million on. That's what she said at that Commonwealth North meeting. That $685 million we spent on the PFD, just look at all the things that we could spend it on. Medicaid expansion and all these other things. I mean, von Imhoff was the same way. She wanted to spend it on tourist hubs and homelessness coordination centers and everything else. I mean, they could spend it tomorrow. They could spend that $685 million tomorrow. So
they could, but what's going on now is you're having oil revenues, excess oil, additional oil revenues come in on top of that. And so they'd have to identify a way of spending not only the $685 million, but also the additional, $500 million, $750 million, $1 billion that's going to come in through oil revenues. They could probably come up with plans to do that, but it may take them a while.
Yeah. Well, we'll have to see what else is what else happens. But I'm with you. I think this change to trying to create a new dedicated fund is just a workaround to find a way to pour more money into that on top of because they're not going to stop putting it through the regular process. They'll just have money in that account that they can give. It's all gimme money at that point. If they create a head tax or whatever else with another $200 or $300 million a year in there, it'll just be gimme money, and they'll still be fighting over the BSA and telling us that we still need to spend more on top of everything. And it doesn't even address, again, none of this addresses the school maintenance problems or anything else.
Yep. And there's no limit. I mean, as I say, the problem with it is there's no limitation. You raise $500 million in a tax, it goes into this account. It's dedicated now, not designated, dedicated for education, but there's no limitation on still spending, $1.5 billion, $1.7 billion, whatever, from the general fund on education.
Brad Keithley, Alaskans for Sustainable Budgets, the weekly top three. We're continuing out now on to number 3, which is an interesting presentation on AKLNG. Brad, what are you talking about here?
So last week there was a presentation over on the House side in House Resources. That's not where a lot of the action has been on AKLNG, but there was a presentation over on the House side dealing with the governor's proposed change to the property tax to volumetric tax, HB. We're used to talking about this in the context of the Senate bill number, but this was in the context of the House bill number, House Bill 381. And I have not seen that this presentation's been repeated on the Senate side. Usually you'll see, especially when you bring in the consultants, that you have the consultant present on the House side and then present on the Senate side, or vice versa. This one appears, at least so far, only to have been on the House side, but it's a good presentation. It's by Nick Fulford, who's the Gaffney Cline consultant that's heading the Gaffney Cline consulting team for the legislature on AKLNG. There's 2 slides in particular, and you can find it. I mean, for those interested, you can find it. Michael may throw up a link in the chat room, or you can find it by going to the House Resources Committee, their hearings this past week, and look for the presentation by Gaffney Cline. But there's 2 slides in particular that I think are important to pay attention to. One is the first one is, the title of it is, why does a host government need disclosure? And it's an excellent way of looking at why Alaska is different in the way in which it needs to dig into the discussion about AKLNG. It breaks the host government role, if you will, the government hosting the LNG facility, hosting the geography in which the LNG facility is going to be placed. It breaks the role of the host government down into 3 categories. First one is in dark green on the slide, host government private capital. And that is like you see in Louisiana or Texas or other states that have LNG export facilities. The host government doesn't really have a role other than being the jurisdiction in which the LNG facility is being placed. And it talks about, the slide talks at this and subsequent slides talks about what the host government looks for when it's playing that role. Basically, it's after the fact. Yeah, you've got an LNG plant running and it's generating revenue, and the revenue is going to be taxed. And it's talking about, audit procedures for how you deal with that. Then the second category is the category that Alaska falls in. And Alaska is unique among the states in falling in this category. It's the host government that has a constitutional duty with respect to the project, but it's private capital that's building the project. And this category, I really hadn't thought of it this way before, but this category is applicable to Alaska because we have a constitutional provision that says we will get the maximum benefit out of our resources for the benefit of the people of the state. You don't find that in the Louisiana Constitution. You don't find that in the Texas Constitution or elsewhere. But you do find it in the Alaska Constitution. And we have state resources. We have resources subject to the constitutional provision that are involved in this project, the natural gas resource that's being developed and marketed. And what the slide suggests and what the subsequent slide suggests is there's a higher duty, a higher level of involvement by the host government, a deservedly higher level of involvement by the host government in those sorts of projects that essentially require the host government to go in before the project and ensure that the economics and that what the host government is deriving, excuse me, what the host government is deriving from the project satisfies the maximum benefit standard. And it's really it's an interesting way of looking at it that I really haven't thought about before. And then the third category is host government equity, where the host government is funding the project, or it has a role in the project in terms of an equity holder, is contributing to the cost of the project, and talks about what happens in that situation. The thing that's important about this way of thinking about it is, in the first situation, host government private capital, it's just another industrial project going on in the state, in Louisiana or Texas, another industrial project. And so you don't really, there's nothing for the host government really to worry about in advance of the project, that it meets the regulatory requirements, that it's not polluting and all that sort of stuff. But there's no really reason for the host government to worry about the economics of the project in advance, because it's private capital involved. In the third category, host government equity, taking an equity role, because it's taking an equity role, the host government is going to get a lot of information in its capacity as an equity owner. And in its capacity as an equity owner, it's going to be in a much better position to figure out what the economics are, and to figure out that what the host government's getting satisfies the constitutional duty. It's this middle category that Alaska falls in, host government with a constitutional duty but private capital building the project, that is the most difficult, because the host government is not naturally seeing all the economics involved in the project, because it's not an equity holder. It's not naturally seeing all the economics involved in the project, but it has a constitutional duty, to ensure that the government is getting the maximum benefit in its tax structure and its revenue structure in connection with the project. And so you're sort of in this middle situation, where you're not seeing a lot of information, just like a host government and private capital. You're not seeing a lot of information, but you have a constitutional duty to maximize benefit, but you're not an equity holder, so you're not seeing all the information you need naturally. And I think that does a really good job. I think this construct does a really good job of explaining why Alaska's in the situation it's in, why you see things like the Giesel bill that essentially asserts the state into the process in a way to see all these economics that you wouldn't see in Texas or Louisiana, because the state doesn't have a constitutional obligation. Is trying to insert the state into this process in a way to see a bunch of information to determine whether the state's getting the maximum benefit. And I really hadn't thought about it this way before, and I think it's a very good tool to sort of help realize why the state is as involved as it is. There's one other slide that I think is important that's useful in this presentation, and I'll leave it to people to read. But it talks about the economics of the project and the break-even points in the project, and whether the state's leaving money on the table by going to the volumetric proposal that the governor's proposed, and other proposals. And this economic tool, frankly, is one I've not seen before, and one that I think is going to be extremely important going forward in figuring out whether there's money on the table that the state ought to be going after in some way from the project.
Brad, do you want to explain what this chart means here for the folks in the chat room and for the podcast later on?
Yep. So this is a chart that shows it's taken from the Department of Revenue's analysis of that they submitted to back up the governor's proposed volumetric property tax. And it's a chart that shows the break-even price at a 10% rate of return, the break-even price at various upstream gas prices, and at various levels of CapEx, at various levels of the investment required in developing the project. And what this chart does that the administration's chart, the Department of Revenue chart, didn't do is look at the prices that exist in the market for LNG in the Asia Pacific market for LNG, and sort of say where the zone of economics are. That is, what price, which of these combinations that Department of Revenue came up with are economic, which would make the project work. And it's when you piece through this, you sort of figure out that Gaffney Cline has said $10.50 per MCF is going to be about the break-even price for the project that delivered into the Asia Pacific market. And so, what you see in the dark green with the dash lines, and what you see with the red lines is using that price, trying to figure out which of these things are economic. And what it tells you is that the break-even price for this project is a lot higher, I think, than what the normal listener, what I took away from from the Department of Revenue presentation. The governor's presentation sort of left you with the impression that we had to do volumetric and we had to do it at 6 cents because that is what was necessary to achieve the break-even price. What this chart tells you, as analyzed by Gaffney Cline with the dashed lines on it, is no. There's a lot of money on the table, money on the table in this project, at various levels, even at various levels of even at higher levels of investment, like 20% above the base capex or 40% above the base capex. There's money on the table that somebody's going to get out of this project. This sort of analyzes that some of that money could go to the upstream, go to the producers, and the state would get a share of that through royalty and through production tax, but only get a share of that. But it also tells you that maybe the 6 cents isn't the minimum or the maximum we can get out of this through the property tax, that there's higher levels that we can get out of the property tax and the project will still be economic. So it's a hugely important chart in terms of finally being able to analyze the economics of the project, what's in the project in terms of potential profitability to still achieve the 10% rate of return, what's in the project in terms of profitability, and what the state, in its role as achieving the maximum benefit, what the state might be able to track out of it. I think this chart will be a key chart, should be a key chart going forward in analyzing not only the proposed 6 cents, but also the governor's proposed 6% property tax rate, but also the upstream production tax and other revenue measures that the state is looking at in its role as achieving the maximum benefit for the state out of the project.
What does this tell you, Brad? What does this say to you as far as the viability of the project? What does this overall chart show you?
It's actually telling you these numbers are actually telling you the overall project's viable, economically viable, at certain levels, at certain capex and upstream price levels. It's actually telling you the project's economic. I'm a little surprised by that, but that's what the experts are saying. So it's a fascinating chart from that perspective as well, telling you that the project may, in fact, there may be an economic project here.
Well, we'll have to see what this means. And of course, Brian said it. We're going to have to, the chart's going to take some ciphering for sure. We're going to have to go through it and take a look at it and understand it a little better. Maybe we could have you come back and break it down a little bit more for us as we go through. All right. Final thoughts here, Brad. We're down to the last minute and a half here. Final thoughts for anything that you have left over this morning.
Well, I want to go back to the first thing about the PFD, because that's going to be on the House floor this week. Somebody, Neil's come the closest so far, but somebody needs to be correctly articulating what the issue is here. And somebody needs to be standing up and talking about that there's a solution, that the governor proposed a solution early on that actually works, that actually serves as a solution that actually would provide alternative revenues to the PFD cuts in a way that would not adversely impact middle and lower income, as much adversely impact lower and middle income Alaska families. I'm going to be looking to the House debate to see if anybody will actually do that. stand
Right.
up on the House
Right.
floor and correctly articulate the issue.
Well, we're going to have to see. I mean, this whole thing with the PFD, again, I'm not trying to be negative Nelly, but I'm just coming to the conclusion that there is no political will to actually fix the problem. It seems like a continuation of the problem is what's I mean, like we said earlier on, avoidance is a strategy, right? I mean, that's kind of not only am I avoiding the cold, it's they're avoiding the reality of the particulars for the rest of the state. That's where we're at right now.
Yeah, everybody sees political advantage to talking about it and posturing about it, not based on fact, but talking about it and posturing about it, and nobody sees an advantage to actually solving it, or nobody's understanding that the solution is out there and is gutsy enough to actually articulate it in the legislative body.
Brad Keithley, Alaska's for Sustainable Budgets, the weekly top three. That does it for us today with Brad. Brad, thanks so much. We appreciate it. Look forward to coming back next week.
Michael, as always, thanks for having me. Well, that's a wrap for another week's edition of the weekly top three from Alaskans for Sustainable Budgets. Thank you again for joining us. Remember that you can find past episodes on our YouTube, SoundCloud, Spotify, and Substack pages, and keep track of us during the week on Facebook and Twitter. This has been Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. We look forward to you joining us again next week on the next edition of the Weekly Top 3.